Facebook has new regulations to where, they only keep the video 30 days. So regardless of when or where you watching it, we welcome you tonight. And also the recording is going to be available on our website, friendshipcommunityservices.org. And this is a part of our Communiversity series, and we call it Friendly Conversations. Now, I want to give you some context as to how we got here and what the purpose is of what we are of our time together tonight. So we come together once a month, and it's on the second Tuesday of each month, where we have a program of Friendship Community Services called Friendly Conversation. Now, if we go back to the inception of Friendship Community Services, Friendship Community Services started out as Friendship Academy, with a a group of members within Greater Friendship Missionary Baptist Church. And the purpose was to where the community educates itself. So it started with community education courses, whether that was computer skills or sewing or gardening or different things that was taught by people in the community. That was the foundation of how friendship at the time Friendship Academy started. So then some time passed by, and with the vision of Dr. James Porter, started a charter school by the name of Friendship Academy. Well, wanted to start a charter school, so the name was changed. Great. Second Thursday, I'm sorry, not Tuesday. Charmaine had to correct me. Thank you for that. So stop sharing for a minute, Greg, but that's exactly what we're trying to do. So you did it. You did it. Um, but I want to start a charter school. So again, group of people out of Greater Friendship at the time in the late 90s worked to start a charter school. And the name was given, the Friendship Academy was given to the charter school. And then the name of the community education nonprofit changed to Friendship Community Services. And throughout the years, throughout the existence, a lot of have served the community in a number of different ways and continue to do so. And this is one of the flagship programs of Friendship Community Services, Communiversity. So Communiversity can be online, Communiversity can be in person. So this is the online version. So that's why we call it Friendly Conversations. This is the online version of Communiversity, where we have different people within our community that come and talk about different topics. And tonight, we have one of my very good friends, Greg Oolman. So, Greg, can you come on camera so everybody can see your pretty face? So, Greg, me and Greg go way back. He is one of my real good friends from when I used to work at the airport for Budget, and then later became Avis Budget Group. And that's where I met Greg. I was the airport manager at the time, and Greg came in as a station manager. And we just spent a lot of time together, and just learning and growing. After both of our times were done at the airport, we still remain friends. And we ran into each other at a monitors event, and just really just connected, reconnected. He told me, caught me up on the things that he's doing, and I thought what he's doing right now is very important for the community to know. So we welcome you tonight, Brother Greg. It's great to still be your friend, and seeing that you're doing great things. So we want to welcome you tonight. And you're on mute right now, so you want to take yourself off mute.
Yes. Okay. I
There
have
you
my
go.
lovely assistant here to help me out.
There you go.
You got Vanna White over here. But anyway, so Billy, thank you for having me. I do appreciate it. Like kind of Billy was saying, I've known him for 20 years. I never thought I would say that about a friend, know somebody for that long, particularly a coworker. But like I said, we've more or less kept in touch, and I'm just happy to be here. Honestly, this has been a lot of fun, and like I said, I've been doing this for quite a while. I work for Heartland Retirement Group. Absolutely love what I'm doing. After Billy and I worked there till like 2009 with Billy, and of course the economy crashed, so that I was out the door. My position had been eliminated, and so I took up a job collecting bills, and I was going to do that for 6 months. The economy got better, and then 10 years later, I was still doing the same thing. So, uh, more or less I found the light, and I got into this business with a company called Banker's Life, and that's kind of where I learned to fall in love with it. And the problem is that we were what's called a captive company, meaning we could only work with Banker's Life stuff. And so, kind of, it got to a point where the products were overpriced. I wasn't really having fun anymore, and it's just it kind of needed a change. I came over here, and I couldn't be happier. It's I never thought I'd actually have a job where I look forward to Mondays, and I finally found it. It's you always hear that cliche of how does it go? You like what you're doing, you never work a day in your life. I didn't really believe that till I got here, and so it's like I said, it's been a blast. There's obviously certain things you don't like paperwork, but other than that, it's love it. So
Awesome, awesome.
yeah,
Well, we thank you for being here tonight. I want to start out just by learning a little bit about you, and I want to let you know that if you're on Facebook, I am watching the Facebook chat. And if you're on Zoom, I am watching the Zoom chat. And if you want to make a comment, you can come off mute and make a comment at any time during tonight. I hear you say you got your lovely assistant, so that means you're married,
yes,
right?
correct.
And so you're married, and how many kids?
So we've been married since what 2012. So was it 13 years then? I'm always bad at the math. October 26th, 2012. I got three kids: Ernest, Effie, or Ophelia, and Eloise. Ernest is 8. Ophelia, my middle one, and my twin is 6, and then Eloise is 3.
Yes.
So we are busy. We got baseball coming up here pretty soon for my oldest, and so it's gonna be a fun summer. It's gonna be good, but it's gonna be a long one. I'm pretty excited to kind of get that going here with baseball and that kind of thing. So
I'm telling you, I went through it. Every moment of it is worth it. It takes a
yeah,
lot of time and coordination, but it's completely worth it. And it goes into our conversation tonight about why you should be protecting your assets, why you should put yourself in position to um, um, help the ones that you love after you are no longer here. We're going to get to that.
hmm
But one thing you said, and one thing I've always known about you is how much you just enjoy having fun at work. I
yes,
mean, and
too
so
much.
some people see work as like, I work to pay bills. Some people see I do it because I have to do it, or I'm following my passions, right? But you actually love just having fun at work. That's what fuels you and helps you see and helps determine if you are in the right work or not. And
Yeah.
even right now. So what is that inside of you that really says, in order for me to love something, it has to be synonymous with fun, especially with work.
That's a great question. Kind of going back to Avis and budget. I mean, you have to there's, you have your bad days in rental car, right? I mean, you remember Christmas, how fun that always was. Uh, Everyone wants to come to Minnesota to see grandma and grandpa, right? And I reserved this minivan 15 weeks ago. Well, I don't have it anymore. I don't know what to tell you. It's gone. Talk to somebody else. But I think honestly, you just have to you got to find a way to have fun. Oftentimes, I mean, that's kind of actually why I got into collections. It was the same stuff, different day. I'm like, I can't do this anymore. I'm not having fun. Um, I don't know, it's going to bring an enthusiasm to it, I guess. I think, particularly in life insurance, it's not the funnest thing to talk about. It can be boring, frankly. People don't want to talk about this kind of stuff, and you just have to kind of make it fun. You have to be engaging with folks. And frankly, if you're having a bad day, too bad, so sad. You still got to do your job and make the most of it. If you're not, I mean, you got to think you're there 40, 50 hours a week. If you're not having any fun, go do something else. I don't know. I don't
Yeah.
know.
It's something about understanding is how the way I see you, even in those tough times, is how you view the situation.
Yeah.
It's 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 even when we were out of cars, you will find a way to have fun. And even when you discussing things and educating people about a topic about life insurance, I mean that could be a pretty sensitive
Yeah.
topic, a serious topic, right? Because you're not only talking about you no longer being here, but it's like, okay, the life of your family,
hmm
after you are here. So what do you do to keep the fun alive, in such a serious type industry?
Well, a couple things. The way I typically do my business is we kind of work with folks one on one in their homes, and I specialize a lot in the senior market. So I get to hang out with grandma and grandpa all day. Okay, which is a lot of which is fun 95% of the time. Sometimes you get thrown off the porch, whatever. But um, some people just don't want to talk to you. It's fine, but yeah, no, it's I think you get to hang. I'm hanging out with grandma and grandpa all day. We're having a good time. One of the things I always throw out to folks is that I call this the Greg stand up comedy hour. I get paid more than most comedians, though. We had kind of a good laugh out of that. But for me, I just kind of I think that I have a great sense of humor. Sometimes my jokes don't land, but whatever. I think I'm funny, and so
That's all that matters. If you think you're funny,
correct.
laugh at
Yes.
yourself. No, if nobody else laughs, you laugh at yourself. Okay.
Exactly. But I
Hmm.
mean, I just you
And
have
your
fun.
wife, and your wife. As long as your wife laughs, I think, and you laugh and your wife laugh, I think you're in a good spot.
Yeah, she's hilarious, by the way. I think it's what's made our marriage last so long is she gives me at least one or two good belly laughs every single week. So it's I'm
Yeah,
like,
yeah, having fun.
yes, you can't. I mean, I don't know if you're not having fun, don't do it. I mean, I don't know. It's just that's kind of just how I operate. I don't know what to tell
Yeah,
you.
it's just your outlook on life,
Yeah,
and regardless of what you're doing, and I thank you for really bringing joy. That's how we say it in the church,
yeah.
and fun and laughter, bringing joy to a very serious topic that we will, be discussing tonight. And you're with Heartland Retirement Group. Can you tell us a little bit about Heartland?
Yeah, so I kind of touched on it a little bit, but basically we're what's called we're part of what's called the largest. They call it an IMO. So, well, actually, I'm getting ahead of myself. So basically, I work for a company, and we're connected to what's called American Senior Benefits, and they're what's called an IMO. All that really means is that we have access to a lot of carriers, and so I'm a lot more independent on this side of the fence versus where I came from. We do a lot of stuff, and you keep mentioning kind of real serious topics. The life insurance is a one. With the life insurance policy, it's a one-time event. Okay, you die. You only can only die once, right? The bigger thing that we like to tackle, and I'll talk about this here in a little bit, is long-term care. And that's really the more serious thing that's out there because essentially you're paying for a funeral every month. Okay. And so it's kind of where we specialize in working and kind of making sure that we solve those bigger problems. And so it's kind of where our more or less our bread and butter comes from. And we do a lot of stuff with Medicare. Again, we do life insurance, we do long-term care planning, and then creating situations where you can set up a pension for yourself. So the example I always like to use, what's his name? Bobby Bonilla. I think it's every either June or July 1st. He gets $1 million check from the Mets. He hasn't played baseball in like 20 years, and he's still getting
Mm,
a check every single year for $1 million. And we
wow.
have the ability to set that up for people. Obviously, it's on a much smaller scale, but we can set something up like that for people where they may run out of money, but they never run out of income. And that's probably one of my favorite things to do to help folks out. So, but yeah, so it's kind of more or less what we do. Like I said, we do the senior market typically. That's kind of our bread and butter, and we do a lot of long term care planning. We do a lot of funeral or final expense planning, a lot of Medicare. It's kind of our more or less what our niche is.
Well, when I first, you probably don't even know this about me. When I first moved to Minnesota, I um I got with a company where I started selling term life insurance.
Okay.
And one of the hardest thing, the reason I got out of it is because one, I don't think I was good at sales until I actually started working at Avis Budget,
Hmm.
and then when I started getting trained and things like that,
Yeah.
um, and they kind of brought out that natural side of me that I didn't even know existed. But
Yeah.
one of the hardest things is convincing people that you need it, because one thing that we see often in our community, I don't like saying like black community or church community because it's like communities see some of these we see some of these commonalities from community to community, culture to culture.
Hmm.
Is that how difficult it is to show the need and how everybody has this. Like everybody, one thing we got I know the law says we gotta have car insurance. I know the law says, I mean, not the law, but we got insurance on our house and for things that all these insurances and all these different riders and packages and everything for things that may happen. But the fact that we will one day our life is going to end is a for sure thing.
Hmm.
So why is this such an important topic based on, just what you see right now? I know we talked about the inevitable, but why is it important to have these type of conversations and to get with somebody like Heartland to intentionally plan it as you are to for financial reasons, for financial reasons to set yourself up.
Well, I think to start it off with, where I kind of pride myself in what I do is I help people help themselves at the end of the day, right? And you know, uh, the one of the you kind of mentioned the car insurance, the homeowners insurance. One of the stats that we learned about here, getting into kind of the long term care planning, and I keep kind of reverting back to that. That's sort of my bread and butter. But you know, there's going to be a 2% chance that you're going to need homeowners insurance unless you live in California. There's going to be about a 10% chance you ever need to file a claim on your car insurance, right? Um, with final expenses or death, there's a 100% chance that's going to happen. Um, with long-term care, it's about a 70% chance you're going to need it. Okay. So I don't know how many people are on the call here, but if there's, let's say, if there's four people here, three of us are going to need long-term care. Okay. And again, that's the cost of a funeral. You're looking at 8, 9, $15,000 a month if you're in a situation like memory care. And so it's one of those things where, like I said before, I help people help themselves and understand that there's resources to make sure you don't leave your family in a bad spot. And, there's a cost to doing something and there's a cost to not doing something. Right.
Mm,
Okay. And that's kind of where the rubber meets the road in regards to that. I mean, yeah, do you need life insurance? No, but you're going to be leaving someone with the bill. Right. Um, heck, do you need car insurance? Well, not really. It's required, but you don't really need it, do you? If you're willing to risk your car getting smashed up and having to pay for that or doing something to somebody else, well, you're taking that risk. So it's just a matter of kind of helping folks, um, avert that risk and just make sure that when the inevitable does come, whether it be dying, whether it be long-term care planning, whether the heck, even just Medicare insurance, you might get sick. You're probably going to get sick at some point. Making sure that you
mhm.
have the resources in your tool belt to make sure that you can take care of those costs, when the time comes.
Amen. 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 So, tonight is the reason I asked you to come is because you all have a pretty unique offering. And the reason I say unique is because usually when we have these conversations, it's a either or,
Mm-hmm.
right? Uh, uh, what I mean by, you'll have people that are offering term life insurance. I'll say all the good things about term life insurance and all the bad things about whole life insurance. You'll have people that say all that are offering whole life insurance that'll say all the good things about whole life insurance and all the bad things about term life insurance.
Mm-hmm.
The thing that you all have that's unique is you all offer both of them.
Yeah.
So you're like you said, helping people help themselves. So it's more about educating you on the pros and the cons of both
Right.
and letting you choose what's best for your family.
Yeah.
So with that being said, can you take us through what you have for us tonight to help us debunk life insurance?
So yeah, so to kind of do you want me to start my presentation? I guess is that kind of where we're getting, or
Is you got the floor. And now I want to say before he gets started
yeah,
is again you can I'm watching the Facebook Live. I may interject with a question or a
yeah,
comment. I'll be watching Zoom comments, or you can come off mute as well. So.
okay. Well, yeah. So, kind of to get rolling. Like I said before, I've been in the business now for about 7 years. Like I said, I think you can see is my screen up.
Mhm.
Okay. So yeah, like I said, I've been in the business now for a few years, and kind of like what Billy was saying, just to kind of piggyback a little bit off of that. You know, each type of insurance has its own purpose, right? And I'll touch on that here in a little bit later. But like I said, I've been doing this for a while. Absolutely love this business. I don't see myself leaving. I plan on dying in the chair here at this point. It's a great time. If you see my contact information there, if you have questions, like I said, I can definitely answer them tonight. Or if you want to reach out to me here at a later date, you definitely can. And so there's me. So like I said, I've been an agent here for about 7 years. Work with a bunch of carriers, and I kind of already reiterated a lot of the stuff and kind of our question and answer thing. But we focus a lot within that senior market. Now, again, if you're younger, I do work with folks like that. But when it comes to kind of like I said, a daily basis, sort of where my niche is more or less. And so work a lot with long-term care planning. Again, that's kind of a near and dear thing to my heart. That's sort of what I've learned in the business as to how to make sure that families aren't left destitute, because the big problem is, and I'll touch on this here a little bit later, is that medical science is getting really good. It's great, actually. The problem we have is that medical science is really good. Okay, so we're living a lot longer, but the quality of care is not improving. They're pumping it. We're getting a lot of medicines and a lot of cures for things, but we haven't really taken care of the quality of life, and that's continuing to go down. But again, we're living. The analogy I always use is the engine and transmission are working out just fine, but the body is rusting apart. And so it's
Mm.
kind of like I said, figuring out ways to sort of plan for that. This isn't all about long-term care, but you're kind of got my wheels rolling here. So kind of to start it off here, I'll kind of give more or less a basic synopsis of this is what life insurance is. I'm not going to talk about too much of the features and benefits. We'll all get bored to death with that. But there's more or less three different types of life insurance, and really what is life insurance? Kind of a dumb question, but all it really is, it's a gamble. It's all it is, right? I'm paying the insurance company X amount of dollars on a monthly or yearly basis. They're betting that I'm going to live, because if I live, they're going to continue to collect my payments. You're betting that you're going to die. Sounds like a weird way to look at it, but you're betting that you're going to die. And because if you die, your family collects the money, right? So that's sort of the gamble that you're playing with the insurance company, okay? And so really there's two types of policies that are out there. Well, three, but you have what's called term insurance. Again, a lot of folks love term, hate term, like Billy was saying, love whole, hate whole. But with term insurance, what this is for, it's a really low priced coverage. But the thing with term is that it terminates, it's temporary coverage. It's best for people that are young and have a lot of debt and are in decent health. Okay. I own a ton of term insurance. Okay. I got 3 kids. I have some big mortgages that are out there that I got to pay off. If something happens to me, I got to make sure they're taken care of. And so I need to get as much life insurance as I can. So if something does happen, they're taken care of, and Ashley can keep doing on what she wants to do. If she wants not to work anymore, perfect. Right. Because there's going to be a lot of things that I take care of, in and out of the house that need to be covered if I'm not here. Okay. The other kind of insurance that's out there is whole life insurance. Whole life insurance is permanent. Okay. That's why it's called whole, is for your whole life. Okay. What we use this for in my agency, we really use it for, oh geez. We use it for, like I said, to kind of help take care of those final expenses. I work with a lot of retirees. They're all they're making is, Social Security. They're paying their rent. They just kind of have minimal income that's fixed. There's not a lot of leeway for them. And so, and they didn't put a lot of money away while they were working. What's wrong with that? Just the reality. And so what we can do is we can set up policies there where, they pay $25, $50, $100 a month. They leave their family with a death benefit that they can use to then take care of their family, to take care of those final expenses, like a funeral, basically like the funeral, all that other stuff that goes into it, so that they're not left with a bill if they owe debt or that kind of thing. They can kind of be have that go, be washed away more or less. And so with the whole life policy, there's basically 2 different parts to it. You have the death benefit. That's the amount of money that your family's going to get when you pass away. Then you have what's called cash value. All cash value is, it's a savings account. This cash value belongs to you. It's your money. If you want to pull money out of your policy to, I don't know, take a vacation, that's your money. You want to take money out of there for a car repair, that's your money. That's your money that you can do with whatever that you want to do with it is. Okay. The other
So,
one we talk about here, it's becoming a lot more popular as of late. These are kind of the things you see on YouTube. The be your own bank and this kind of, I'm not sure if you've heard of any of this kind of stuff, but there's some ways to kind of,
I ain't never heard of this one.
uh, the be your own bank or index
No, that
universal.
yeah, this index universal like.
Okay. And maybe just because I'm in the business, I get flooded with this stuff all the time, but you'll see, a
Hmm.
lot of YouTube videos where it's, oh yeah, I've used life insurance for this and that. But what this is, it's kind of a combination of term and it's a combination of whole. The reason it's kind of a combination is you have the ability to pay less premiums than you would on a whole life insurance policy. And the way that your cash value builds up is a little bit different. What it does is, as the market goes up, it's not actually in the market. Let me start with that. It's not actually in the market. It tracks what the market is doing. So as the market goes up, you're going to get a chunk of those gains. So let's say the market's up 10%, they'll give you between 7 and 8, somewhere like that. If the market drops, the money that you have in there, you can't lose anything. And so what's nice about this is if you have kind of a longer time horizon to put money into this, you have an opportunity to grow your cash value at a much higher rate than you would with a whole life policy. And oftentimes those premiums can be a lot cheaper. Okay. There's different ways to utilize this. I could spend 2 hours talking about that. We're not going to do that tonight. But yeah, that's like I said, kind of one of the newer
Wow.
products that's on the market that you can kind of use as a way to fuel your retirement. We'll talk about that here a little bit later. All right. So I get asked all the time, what is the best kind of life insurance? Is it term? Is it whole? Is it index universal? Is it variable universal? What is the best kind of life insurance? Anybody got any ideas? Okay.
Yeah,
Well, the best kind
I
of,
mean, I heard you mention another one. You said variable universe. You said index universe. Then I heard you mention variable
oh,
universe.
um,
So there's different types of universal as well, is what you're saying.
correct. Yeah. They have fixed universal, which is just kind of X. It acts like, you get more of a guaranteed rate, but you have to kind of pay a little bit more for those. And then you have what's called variable universal life. That's an investment. So kind of like I mentioned with the index, you get to track the market as it goes up. But if it loses, you don't lose anything, or drops, excuse me. With variable universal, you're using mutual funds to grow the cash value. So if the market goes up, you get all the gains. If the market goes down, you lose everything. If the market goes up, you get all the gains. If the market goes down, you lose everything. And so it's more of a riskier proposition. I'm not a fan of it. Yeah, never mind. I'll keep my opinion out of it, but it's just it's a lot more. Insurance is supposed to be protection, and you're kind of risking quite a bit. That's kind of why I'm not the biggest fan of it. If you have it, great, keep it. That's not, it's none of my business. But like I said, that's just kind of it's a little bit more risky than other products. It's just that's kind of why I'm not the biggest fan of it. But anyway,
I do have one comment in there to address your question.
yes.
Deacon Jonathan said, with universal life, one of the best features is the ability to have a policy loan and potentially not have to pay it back.
Yes, that's more or less how it's leveraged. Sometimes your death benefit will go down. You do that, but what a lot of folks will use this for, I think you're kind of piggybacking off what I'm saying here. I'll piggyback off what you're saying. Is that a lot of folks, what they'll do? This is kind of a cool strategy. Like I said, I didn't want to talk too much about this, but you got me going. So let's say you're supposed to pay, $50 a month into the policy. What you can do is you can pay more than that $50 into your policy. So I'll use an example, just throwing out random numbers. You put in $100 a month versus the 50 that you're supposed to put in. What ends up happening is you're having more money that's being put into that policy. And so because of that, it's going to grow a lot faster than it normally would. It's called overfunding. Okay. So when you overfund these policies, what you have the ability to do is your cash value is going to grow a lot faster. When it does this, you now have some room or opportunity where you can take loans out against the policy, and then you can use that to create income for yourself in retirement.
Wow.
This income that you're using is actually tax-free. Okay. So getting into my presentation. For instance, a lot of people have 401ks, right? You have IRAs. And so when you put into those types of accounts, you're saving money as you put them in, but at some point you got to take those things out. When you take those things out, the IRS is going to hammer you. And so a lot of wealthier folks will use life insurance to apply that same principle. So as opposed to them having to pull out of their IRA accounts and pay a ton of money in taxes to do this, you can use life insurance as an opportunity to use this as income. Like I said, I could do a
Mm,
whole presentation on that. I don't want to get
wow.
too much into it, but that's like I said. So like I said, it's kind of a way to leverage life insurance. Long story short,
Wow.
yeah,
Interesting. Interesting. Thank you for
there's
that.
some really cool things you can do with it. But like I said, it can be kind of a
So
this is
I
our
don't
name.
know if this, and I don't know if this is in your presentation or not, but are the other ones like when you think about term life insurance, right? I know there's different terms in terms of length of time, but there are
Yeah,
the different products of term, and then the same for whole, is it? And you don't have to go through all of them if there are. I just I don't know a lot about the life insurance world. I just know I need it,
yeah,
So when you're talking about the different ways you can leverage universal, are there other opportunities in the other ones as well?
yeah. Really, term is pretty much a commodity. Because it all does the same stuff, right? You pay. It's just really a matter of kind of finding the company that's going to give you the best rate based on your age and your health. It's just it's like I said, it's a simple gamble between the insurance companies. If we want to get into more detail, some um, term policies will have what's called riders on there that may offer different benefits than you would in a different policy. Generally speaking, term insurance is in really whole life insurance is more of just a commodity product. It's you give me your age, you give me your health, and we'll figure out the different carriers that would work best with your situation. So, it's kind of an example. Some carriers don't want to deal with diabetes. Some carriers I don't say love diabetes, but will give you a pretty favorable rate if you have diabetes, as an example. So it's just kind of a matter of determining your health and your age, and then kind of figuring out which company is going to make the most sense for you. It's really about all there is to it. And like I said, there's just little small details in regards to, like I said, riders and things, like different living benefits they call it, which we'll talk about here in a little
Hmm.
bit. But yeah,
All right. Well, get into your presentation, man.
yeah, yeah,
I could just spend the whole time asking you questions about it, but I'll write down my question and if I see any questions come up, I'll let you know. I do want to just acknowledge that Mother Gail is on Facebook, Mother Murray's on Facebook, Sister Hayes is on Facebook, and Mother George is on Facebook. So thank you all for being here tonight.
yeah. Thank you for guys for coming. I appreciate it. I know a lot of people aren't so jazzed about life insurance, but anyway, kind of getting back to it. People ask me all the time, "What's the best life insurance? Is it index universal? Is it whole? Is it light? Is it term?" Really, the best type of life insurance that's out there is the one that's enforced when you die. Okay. When you pass away, your spouse, your kids are not going to care if it was term insurance. They're not going to care if it was whole life insurance. They're not going to care if it was, whatever kind of life insurance that's out there. Um, they're not going to care. And frankly, no one's ever going to complain that you left them too much money. Okay. So that's kind of the main thing with that is, like I said, make sure that you're protected. There's reasons to have either one of them. But like I said, at the end of the day, um, you need to have something to protect you and your family at the end of the day. And so that's kind of the main thing with it there. So, kind of getting into it. A lot of folks that I talk to, they hate life insurance, right? You're going to pay a bill that you never see the benefit for, right?
Mm,
So if I'm paying, my power company, I pay them a bill, I get to turn on my lights. Okay. Your cable bill, Comcast. When you're paying your Comcast bill, you turn on your TV and ESPN shows up. Okay. With life insurance, people don't like it simply because I pay this bill, and the only way for me to get my money is for me to die. Well, if I'm not here to collect my money, what's the point, right? And so now we'll kind of jump into some of the myths that surround life insurance. Okay, one of them being it's a poor place to keep your money. Okay, the other one that's out there here. Now, don't get mad at me, term folks. But buy term and invest the rest. And I'll kind of explain more or less why that's a myth. It's a good strategy, but we'll talk about that in more detail here a little bit later. I can't use my life insurance while I'm still living. Okay. Again, kind of like we talked about before, a lot of folks call life insurance death insurance. Okay. Because you can't use it until you're dead. And I have to pay on my life insurance until I die. Okay. Those are the main four myths that surround life insurance. We're going to kind of touch on a little bit of those for a few minutes. Okay. So, first one, life insurance is a poor place to keep your money. So it says here at the top that 51% of equity managers hold no stake in the funds they manage. Okay. So, how many know how many people in you know what an equity manager is?
I don't know what an equity manager is.
Okay.
I mean,
So,
I can say equity and manager and financial institution, like I can put it all together and assume, but I couldn't tell you what a definition is.
okay. So, what that means is that a lot of folks will have what's called a financial advisor, right? Those financial advisors, you give them their money, and what they'll do is they'll take your money and put it into mutual funds, stocks, and bonds, and that kind of thing. Okay. When they're talking about an equity manager, those are the folks that actually run the mutual fund. And so, what a mutual fund is basically you give your financial advisor your money. The financial advisor then gives this money to what's called an equity manager or to mutual fund. And this equity manager is buying and selling the stocks and
Oh,
holding
okay.
the
Yeah, yeah,
mutual
yeah,
fund
yeah,
money.
yeah. Yeah,
Okay.
yeah. Okay.
So when we talk about an equity manager, so 51% of equity managers hold no stake in the funds they manage. So more than half of these guys that are taking your money and putting it around and placing it different places don't own, they're not eating their own cooking.
Mm,
Okay. And so what they do then is they own some significant amounts of cash value life insurance.
mm.
This is my favorite thing to talk about. Well, one of my favorite things to talk about. Where do banks put their money? Or I said, where do you think banks do? I mean, I come to giving you the answer here, but um, you'd think that a bank would want to invest in CDs and savings accounts, right?
That's what I would think, right? Or the
Yeah.
Forex market. That's what I keep hearing.
Yeah. Oh, that's a whole. Oof. Um, but they put their money into cash value life insurance. Okay.
Interesting.
4,000 banks have more than $160 billion in cash value life insurance. Okay. Going on to that next stat, Bank of America, one of the largest banking institutions here in this country, they own $18.5 billion in cash value life insurance.
Mm,
Bank does. Okay. That is worth more than worth more, all of their branches, which is over 5,000 in the tallest building in Manhattan. Okay. Yet the banks are telling you to put money in savings accounts. They're telling you to put money in CDs, into checking accounts. Now, granted, I'm not saying those things are inherently bad, but you'd think again these banks would eat their own cooking and invest where they're putting they're telling their clients to put their money into. And so it's kind of one of those things. Is okay. Um, do you want to listen to what the bank is telling? I guess kind of what it boils down to. Do you want to put your money where the people that know about money put their money into, or do you want to put the money into places where they tell you to put the money into? Does that make
mm,
sense?
hmm.
Okay.
Wow.
And so then if you take a look at life insurance, I mean, if you can find me an account that's going to yield, get guaranteed returns and yield more than 5 to 6%, 5 to 6 times, excuse me, more than CDs, give you those guaranteed returns. The money that builds up within your policy does not have to be reported to the IRS. Okay. So if I take money out of my life insurance policy, if I borrow money from my life insurance policy, I don't have to report that to the IRS at all.
Mm,
Okay. You can access this money anytime without penalty. So if I want to pull out $500, it's my $500. I can do whatever you want to do, and lets you retire, both for you, for your family, and for yourself, 100% income tax free. Okay. If you look at your IRAs, again, you save money. I'm not saying don't do IRAs. I'm not going there at all with it. IRAs are a good thing. It's an opportunity to let your money grow within the market and ideally get pretty good returns on it. But with an IRA, if you pull money out of there before you're 59 and a half, you pay a big penalty. If you pull money out of there at all, you got to pay taxes on that money, right? If you have even just a simple savings account, right? Let's say you're getting 2 or 3% of on your savings account. Okay, the bank is going to send you a note every single year called a 1099. That 1099 is income that you have to report to the IRS. Okay, even just in a simple savings account. And so life insurance, none of this applies to any of that stuff. That's kind of why. And the reason people don't know about it is that it's highly regulated. They're not allowed to advertise this kind of thing. Not sure why. Well, I think they do know why. Is they want people to put their money into IRAs and put them into savings and things like that, so the government can collect taxes on it. It's probably what it is. I'm wearing my tinfoil hat here a little bit, but I mean, you can kind of, if you read the writing on the wall, that's really what's going on here. Okay. Any questions on that at all? Okay. So the other strategy that's out there, and this is kind of it's not a myth necessarily, but it's something I do like to talk about. And so we call it buy term and invest the rest. With this strategy, this actually makes a lot of sense. Oh, go ahead. Sorry, I see a hand up.
Yeah, go ahead, Miss Jolie.
Oh, yes. So you was talking about the various way that you can save money. And my question is, what do you decide the money that you paying for life insurance, whole life, or just term life? You decide that money you're gonna save yourself, not put it in a savings account, but money that you just save yourself. And you're like, okay, this is for my family. If something happened to me, I can go and borrow this money for myself and still have money saved for my family. So what would you say about that option?
So do you mean like putting money into the bank? I'm sorry.
Not putting money in the bank. You just saving your money uh under your mattress. Just a place. I'm just saying that. You just self-saving your money, but not putting it in the bank.
You can do that. And I'm actually going to talk about this a little bit later. But the problem is that dollar is not going to work for you at all. So you're going to lose out to inflation. It's kind of the main reason why you don't want to do that. People put their money into savings accounts for a couple of reasons. One, to have access to it, I think, is the main one. So if I run into an issue, I can pull money out of the savings account. And again, I'm not advocating saying that don't put your money in the savings account. It has a purpose. I'm not saying, well, put all your money in life insurance. No. But when you put your money under the mattress, a dollar today is not worth a dollar. It's going to be worth, 98 cents tomorrow. Okay. And so your money is not able to keep up with inflation. And that's the big problem you're into, is that your money isn't growing. And so it's good to have money in places that that you're going to get some growth to kind of keep up with everything is. Again, a savings account is a good place for that. Life insurance is a good place for that. Investments in IRAs are a good place for that. And that's kind of why you want to have your money in places that are going to grow, so that as things become more expensive, your money can kind of keep up with those expenses. Does that make sense?
It does, but I'm thinking about now, with Trump being in office and the 401k is plummeting, and so you losing your money. So is right now is a good to me. Right now is a good time to just kind of hold your money steady, and so that's just me being my personal belief right now.
Mm-hmm.
Um, just have something saved. Hey, what if recession come? You got some money around to do what you need to do with.
Yeah, I
Thank you.
mean that's definitely an option. Yeah, I mean that's definitely an option that you can take advantage of. Is take the money and put it in the backyard, or whatever. I mean, for me, if we're really coming, I mean, and I'm talking to a church group. I think the end times are not too far away. And if you're really getting kind of serious about prepping and that kind of thing, um, you know, get bullets and get water. I mean, we got something coming down the pipe. I don't know what it is, but something's coming, and I couldn't tell you what that's going to be. But I mean, I think if that's kind of where your mind is going, I know a lot of folks like gold. I don't know if
But
people
but
can
let,
trade
let me
gold back
let me
and
ask
forth.
this question then, because
Yes.
so with the fluctuations of the market, like we know how things fluctuate if we got it in a 401k or IRA, things like that.
Yeah.
You mentioned something that says one of them is not it moves with the market and things like that. So in terms of the fluctuations of the market, how does the term and universal, not the term, but the universal and the whole work with the fluctuations of the market? I think that's one of that would make me that question made me curious about that, you know.
Yeah. So with the whole life insurance, that's a very simple product, right? You're going to get a guaranteed return year after year after year
So
after year.
regardless of recession, regardless of what happens, you're gonna get the same return in whole life insurance.
Exactly. And so if you getting a little really nitty gritty, if you open up a policy, you're going to have what's called an illustration. And it's going to give you your guaranteed cash value year after year after year after year. So you know that in year 3, I'm going to have X amount of dollars within my policy. Year 5, I'm going to have X amount of dollars within my policy. Year 10, so on and so forth. You know what you're going to see and you know what you're going to get. It's a very simple product. Index Universal Life, there's illustrations that are given to you. The one thing about an index universal illustration that we do know it's going to happen is always going to be wrong. We don't know what the market's going to do. We don't know what these indices are going to do. And so I don't say you're not gambling necessarily, but you just don't know what you're going to have in the future. That's kind of one of the downsides with the index universal life. If the market never grows, then your money's never going to grow. Now, granted, we haven't seen that. I don't know how long. Yes, we have dips, but I mean, if you look at the S&P overall from, I don't know, 18 whatever until today, I mean, it's always gone up steadily over time, right? You're gonna have little dips in here and there in the short term, but overall, we've never seen it lose. And so it's kind of where index universal life sort of understands this, and it's going to help you sort of ride out some of those waves. Is that making sense? Did I answer your question?
Mm-hmm.
Okay.
Mm-hmm. Just looking at, like Sister Julia said, you put your money, you got it, under your mattress, or you got it in a, you lose out to inflation, but you got it.
Yeah.
You put it in a 401k or IRA, you subject to whatever the market is doing. So that's why I
Mhm.
had to, wanted to act. 'Cause right now, a lot of people saying their 401ks value 401k go down. So is, whole life insurance an opportunity to move money to a safer place to where it can still continue to grow in the midst of everything that pretty much is on the horizon. I think we all see the writing
Yeah.
on the wall, so but go ahead and finish
Well,
continue with your presentation. So
yeah, and actually to kind of add to your thought too, a lot of folks think, I guess the question I kind of posed to the group, in regards to safety, what do you guys think is safer, banks or the insurance industry?
I don't know.
Okay, so the insurance industry is, but believe it or not. So the way the bank operates, well, there's one statistic that's out there. This is a few years back, but I think I can't remember what year. Maybe 2019. It was before COVID. But I think 20 bank. I was giving a presentation to agents that worked for me, and I want to say between January and like May, 20 banks had failed.
Yeah, I remember that.
Okay. We haven't seen an insurance company fail since like 2001.
I was going to ask that question, like what's the
Okay.
failure rate between the two of them? Okay.
Yeah. And so the way a bank operates is it's called fractional lending. Okay. So what they do is Billy, you deposit you deposit $1 into my savings account. Okay. I take that dollar and I can loan it up to like 5 or 6 times. So you give me $1 in my savings. Well, and actually, yeah, you give me $1 in my savings account. I take that dollar, loan it here. I loan it there. I loan it here. I loan it there. Okay. What happens if 3 people don't pay their loan back?
I still got two.
Yeah, but again, it's not guaranteed. Or even 4 or 5 people don't pay their loan back.
Hmm.
And oh, by the way, in the meantime, there's a run on the bank, so everyone's withdrawing all their money out of the savings accounts. We have people that are owing us and don't pay us back. Okay.
Hmm.
Oh, but we got the FDIC, right? Well, the FDIC, what they do is they can either they have like the $250,000 guarantee. That guarantee does exist, but they can pay you back however they feel like it, whenever they feel like it.
Interesting.
Okay. With an insurance company, the way that they operate is, let's say that you give me $1, I can only loan that dollar out one time, and so I have to have what's called reserves in order to make sure that if something happens, we're good to go. And then and even then, what'll end up happening? Let's say an insurance company does go belly up for whatever reason, they just do a really poor job, or they have people doing some grimy stuff in the background. Oftentimes, what'll happen is another insurance company is going to come in and buy them up, because what they can do is basically get all these free premiums at a discount, and they're going to come and swallow up that insurance company, and now it's just free money for them. Okay. And so like I said, when it comes to a safe perspective, a lot of folks use the bank as that safety, but in reality, the insurance industry is much, 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 much safer than you'll ever see.
Wow.
Yeah, it's crazy stuff. I mean, this is, I didn't want to get this deep into it, but you got the
That's cool. We got about 10 minutes though.
oh, we're not even close to where we need to be. Okay. All right.
Conversation's just that good, so
Correct. All right. Maybe we'll have to do a
the
part
friendly
2 at some
conversation.
point. But anyway, back to the buy the term and invest the rest. I'll finish this and I'll probably find a different strategy to go after here in a second. The problem you run into with the buy the term and invest the rest is that people do one of two things. Either they buy the term policy and they end up spending the rest, or they buy the term and invest the rest, but they don't do it properly. I keep going back to IRAs. Okay, so most folks use their 401k as their main savings vehicle for retirement, right? But again, the problem you run into is that, with the 401k, you're not taxing that money now, but you will have to pay those taxes when you pull the money out. So yes, you're saving on taxes now, but that guy pops up to take his fair share. Okay. We'll skip that. Let me think. Okay. So the other thing we can do is a lot of folks think they can't use their life insurance while they're alive. Okay. And so the two big things we're running into, again, I mentioned this earlier, is that medical science is getting really good. Cancer diagnosis, 88% of cancer cases will be diagnosed with people 50 and older. 39% of women in their life will get cancer. 41% of men will get cancer in their lifetime. Okay. A heart attack, it's one of the most expensive conditions that's treated in a hospital. Okay. Why am I bringing this up? So again, I mentioned it earlier, the heart attack in particular, that example, 90% of people who get a heart attack live. Okay. The stuff that used to kill those widow makers, they're not widow makers anymore. They're keeping us alive. And so the average, hospital stay for that you got to pay is $21,000. Okay. The joke we always talk about is, you have a heart attack, then you get your bill in the mail, you have another one. Okay. And so, And so what ends up happening then, and with cancer, more and more people are being cured of cancer, but the problem is cancer is very expensive to treat. Okay. So why am I bringing this up? A lot of folks have to dip into their savings. They have to borrow money to pay for these bills. What the life insurance industry has done as of late, probably in the last 10 to 15 years, is what you can do is you can peel off money off your death benefit to pay for some of these expenses. It's because they call it critical illness. So cancer, heart attack, and stroke. So let's say that you have a $100,000 life insurance policy. Okay. You don't have the greatest health insurance. You got to pay your full deductible at $10,000. And the thing is, when you get a heart attack, it's not like you had a heart attack on Friday, you're back to work on Monday. It doesn't work that way. It'd be nice if it was, but it's not like, hey, Billy, how was your weekend? Well, I went fishing. I had a heart attack on Friday. It was good to see you here on Monday, And so what ends up happening is you have to take time off to replace those wages that you're missing out on. Because if you're not working, you're not getting paid, right? And so what you can do is you can peel off a good chunk of that death benefit to then pay for those expenses that you might be missing out on. And then at the end of it, so let's say, again, you need $30,000 to replace those lost wages. At the end of that situation, your family's left with $60,000 they can do with whatever they want to. Okay. We won't talk about inflation. It's going to take too long. Okay. Let me think here. Okay. We'll talk a little bit about long-term care. We've kind of mentioned here already. 70% of people are going to need long-term care if you're over the age of 65. And what's happening here is that kids are becoming the caregivers. I'm assuming we have some people in here that are kind of part of that sandwich generation. So they're having to take care of their own kids, have to take care of mom and dad. We have a few of those in here, I'd imagine. So what ends up happening is 47% of working caregivers indicate an increase in caregiving expenses that has caused them to use up all or most of their savings. Okay. So because again, if I'm taking off of work to take care of mom and dad, my bills don't stop. The daycare bills still due. The mortgage bill is still due. All the things that we need to, all the bills that need again are still due and have to get paid. The other piece of it too is that family caregivers experiencing extreme stress have been shown to age prematurely. This stress can take as much off the 10 years off a family caregiver's life. Mm. So what happens with long-term care is it becomes a generational curse because, again, your kids become sick, they become broke, right? When they're sick, now the grandkids have to take care of the kids who have to take care of mom and dad. And that's where the real big thing happens, okay? It's also extremely expensive. To go to a nursing home, you're looking at it here in the Minneapolis area, It ranges between $123,000 to $150,000 a year. If you want to hire someone to come into the house, it runs about 80 grand a year. Okay. I kind of mentioned that here already. So long story short, what you can do is, again, the same thing applies to the heart attack and cancer piece of it. So let's say that you do have, quite a bit of money into an IRA account, right? If you take that money out of your IRA to pay for long-term care, you're going to have to pay quite a bit of expenses on there. And even then, they got, in this example here, they got about $500,000 put away. They take out $200,000 to pay for long-term care, and they leave the kids with $300,000. Okay. Problem you run into, this guy here again comes in and snatches up, 38% of that income. Okay. So at the end of the day, we use a 2-kid example here. I know I'm kind of rushing through this here, but from a $500,000 balance, they're only left with $93,000. Okay. What life insurance allows you to do is, again, the same principle applies. You can use a portion of that death benefit to pay for long-term care. You can determine who that money goes to. It doesn't have to necessarily go to the nursing home or professional caregiving association. If your kids do want to take care of you, and a lot of folks do want that, you can use that money to pay your caregiver to take care of you. Okay. So again, with this life insurance policy, let's say that you do have a $500,000 life insurance policy. Same example here. You got $100,000 the first year, $100,000 the second year. When that happens, when you die, your family's going to get $300,000 tax-free, and they still get a decent chunk of that IRA account, about $77,500. Again, I'm trying to rush through this here. I apologize. Okay. Last thing I'll touch on. If you guys have a whole older life insurance policies, I'm trying to rush through this as quick as I can. We got about 3 minutes. Okay. So the way a policy works is you have 3 different portions to it, right? You got your premium, you got your cash value, and you got your death benefit. Okay. So in this example here, this person is paying $40 a month for a $10,000 policy. When you die, the insurance company is going to take that the insurance company is going to take that $6,000, and they're going to pay your family out the 10. You don't get to have both. You don't get to have $16,000. You're only going to get the 10, and the insurance company keeps the $6,000. This is kind of that main thing that a lot of term insurance salespeople talk about. This is why they sell against it. Because, well, that money, we're losing your money, right? And so really what ends up happening is the insurance company is really only on the hook for about $4,000, right? You have $10,000 in death benefit that they're going to pay out. They're going to keep this cash. And so really you're paying $40 a month for about $4,000. That's all they're on the hook for. Okay. What you have the ability to do is you can take this $6,000 in cash value. You can put that into a new policy, because a lot of these older policies are a lot more expensive. When life insurance 30 years ago was taken out, people weren't living as long. And so because of that, life insurance now is a lot cheaper. And so what you can do is you can take that old money, update it into today's rates. And oftentimes what I've been able to do this for retirees is, hey, I don't have to pay this $40 anymore. It's called a paid up policy. Oh, by the way, I'm getting $12,000 in benefit. So I've increased my amount of death benefit by $2,000. I no longer have to pay a bill. Okay. I had a client of mine way back when it was a much bigger policy. He wanted to keep paying that same premium. I was able to get him another $80,000 in death benefit, just like that.
Wow.
Yeah. I kind of want to talk about this a little bit more, but yeah.
Go ahead. Go ahead. Take a couple more minutes, because this is good stuff.
Yeah, this is my favorite part of my job is I get to eliminate bills. And here's the other piece of it. So I get to eliminate bills and leave families with more money. Okay. And so it's kind of like I mentioned before, again, you're eliminating an entire bill out of somebody's life. Again, you're leaving family more money. Now, with these older policies, we talked about the long-term care, we talked about the cancer, we talked about the heart attack coverage. These newer policies also have those benefits in there. So again, let's say you have this $12,000 policy, this newer $12,000 policy. You can then peel off that death benefit to use for long-term care, to use for cancer, to use for heart attacks. Okay. And so this can also be used for smaller policies. So again, you can get you more death benefit on a smaller policy, potentially eliminate it. I mean, I'm working with folks on a fixed income. $40 a month is tough. Guess what I did for you, Gladys? I eliminated $40 a month out of you for you, excuse me, and gave your family more money. And now, we're best of friends. Okay. And so to kind of conclude it, is this concept making sense? I kind of rushed through that. Anybody have any question to kind of help maybe to reiterate something?
I mean, just the fact that there's ways that in my mind, when I think about life insurance, I think about, getting your policy, making sure you have a policy.
Yeah.
Didn't know there's so many different financial ways you can move your money around that could actually, add equal more.
Mm-hmm.
The leverage, you can use it as leverage as well. So yeah, it's a lot to take in. I'm gonna have to watch the video all over again, watch
Yeah.
this episode all over again. But I'm tracking. But I want to. If anybody have any questions though, like we said, we're gonna go a little bit over. But
Yeah.
this is good stuff.
So, long story short, life insurance, when used properly, is good into addition into retirement. I'm by no means saying that you need to retire only with life insurance. That's not wise. Life insurance policies can be used to cover long-term care, to use hospital bills and lost income resulting from a critical illness. Kind of like we mentioned before, that concept of putting more into a life insurance policy than required. When that money grows, you can then use that money for additional income. I was trying to kind of get into this, but I sort of skipped over it. Life insurance can be permanent without making additional payments. One way to do this, you can kind of with that updated policy example. It's called single premium. Basically, you give the insurance company, let's say $10,000, to give you a $20,000 death benefit. You never have to make another payment again. I didn't get a chance to talk about that, but we can do that maybe another time. And again, like I said, my favorite thing to do, update your policies. If you have old policies, maybe grandma bought you a policy and you were 5 years old, you've been paying on this thing for 10, 20, 30 years. There's opportunities here where you can eliminate that bill, get your family more death benefit, and help you take advantage of some of these new benefits that are out there within a life insurance policy. Again, I keep harping on this. Long-term care, heart attack, critical illness, a lot of the things that are going to affect you while you're living, the life insurance industry has created situations to help you take care of those problems. Okay.
Wow, that's
Um,
another thing I didn't know.
yeah, it's like I said, I mean, it's more like I don't say a Swiss Army knife, but like I said, there's a lot of things that people just don't know about life insurance that you can use while you're alive. And that's kind of the more or less the crux of what I wanted to talk about today. So, with that, I know we're over time. Anybody got any questions?
I do have one question in
Yeah.
terms of just when is it too early? Is there a such thing as too early or too late to get life
No,
insurance?
not at all. Well, I mean, some carriers won't take if you're, I think a lot of carriers will stop taking you at 85. But in regards to, I have policies on my kids. Because again, this is disgusting to talk about. I don't like talking about this, but if your kid passes away, do you have $10,000 to bury them? I hate asking that question. It makes me sick to my stomach. But again, I mean, because your other alternative, we had a guy, another manager in a different office. He used to work in funeral homes, and he would see the families come and they're maxing out all their credit cards, maxing out these credit cards to pay for the casket, to pay for the service, to pay for the flowers, to pay for all this stuff. And so the problem you have, and so what ends up happening is every time you get that credit card bill in the mail, you got to make that payment to the credit card bill or to the credit card company, and it reminds you what happened month after month after month. And so I hate anyway. And so it's a good reason why to have life insurance on your kids. Again, if you're, and like I said, I work in the retiree market. As long as you're within the age guidelines, there's not a bad time to purchase it. Even if you're really unhealthy, there's ways to cover that too. That's what you're seeing on TV all day with Colonial Penn. So no, there's not it's just more a matter of what kind of life insurance do you want to have at what age versus having it or not having it. Does that make sense?
Yeah, yeah,
Yeah.
yeah. So want to really encourage everybody to um really, if you don't have life insurance, really do your research on term, on whole, on Universal and determine which one works, best for your situation. If you already have life insurance, like I seen, thank you, Ms. Laura. She said she has same policy for 40 years within her family. We encourage you to revisit some of those things to see. It make me think about it made me think about your cable bill or your cell phone bill. Like if it's over 4 or 5 years old, you need to go back and check with them because they might have a better deal to
Not
update
actually.
it. So you might want to revisit that
Yeah.
to see if there's a better options. I mean, the options of the heart attacks and things like that. Can you go to that first slide again? So this is what this is all about. This is Greg
Ah,
is
crap. Hold on.
you know
Did I
Greg.
did I mess something up on the screen?
No, no, no. There it is. There it is. So Greg he's good at what he does.
Except
As
this.
you can see and as you can hear, he's very knowledgeable. You had it. You had it. There it is. Yeah. He's
There you go.
very knowledgeable. If you want to reach out to him, there's his information. You can reach out to him directly, but it's more about giving you the information so that so you will know what the best option is to for your life. So we want to thank everybody for being here tonight. Charmaine says thank you, Greg, and I want to thank you on behalf of Greater Friendship, on behalf of Friendship Community Services, and what we believe. Like you said, this you're in front of a church crowd is that death is not the end; it's the transition
Yeah.
to so that we can be with our Lord and Savior for eternity.
Mhm.
And if somebody listening that has not accepted Him, that is the life that Jesus offers us. And He also gives us people like Greg in life insurance, so that when we are with Jesus, that our people are taken care of while we're not here in the flesh. So. Thank you all. We will be back next month where we will be talking about housing, supportive housing, affordable housing, things like that, different options that are available in our community. So again, this is Friendship Community Services, Communiversity, and we thank you for joining tonight. So thank you, Greg. Appreciate
Yeah,
it.
I thank you guys. I had a lot of fun. I appreciate the opportunity to come and talk to you guys. Thank you so much. Honestly, this was great. Or I had fun. I
All
know I
right.
can't speak to you guys, but
All right. Well, we'll be in touch. Thank you,
all right.
Greg.
Thank you so much.
All right.
Bye now.
Bye bye.